So tonight, in terms of our speakers, obviously I'll be hosting the meeting, and Peter Ambrose, our three main panel tonight, you are mostly all probably quite familiar with. Peter, my colleague and Vice President on the committee, has been an investor for over 20 years and is now a professional investor and also a property coach and a property finder. Conway Langford, been in and out of jobs for the last sort of 15 years or so, but more lately in the last 10 years or so, I think, Conway, you've been full-time in your investing career, and also been investing very successfully in Wellington for, what, it'd be at least 20 years, wouldn't it?
Yeah, coming up to 22 years. 22
years, yeah. Oh, very good, very good. Same as me. 1998 was my first one. Excellent to have you on board. And Matthew Wright also, great to have you on board too, Matthew. I think you've probably had a job for about 10 minutes, haven't you? And other than that 10 minutes, you've been a full-time property investor. So, and again, what's that been? 20 years, 25 years?
20-something years, yep.
20-something years. That's rough enough for rock and roll. Very good. So everyone here been through at least 2 recessions, either professional investing already or semi-professional investing already, and have dozens of properties each, so should be well placed to answer questions. So look, I'm going to get started with some questions which I've kind of prepared, and if you guys out there have questions in particular, I have a couple of which you've emailed into us, which is fantastic. But look, just to sort of start off and set the scene, I suppose, there's no question this is a recession. We don't have the measurements out yet, but if you're reading the news, you'll see all sorts of dire predictions. I mean, goodness, I think the worst I've seen was Bob Jones, who suggested he would be happy if our unemployment was contained to less than 25%. Now, we haven't seen unemployment anywhere near 25%, I would imagine, ever since records began. But let's hope that's not the case. But I know Treasury have forecast in their scenario planning that unemployment might reach sort of perhaps 10, 12%, although they're hoping that it will be contained to under 10% with the measures that are in place, and so on. But nonetheless, there's no doubt that we're in a recession. CoreLogic are predicting 6 or 7% GDP loss, as in negative growth or shrinkage of 6 or 7% in the economy. This is big, and unlike other recessions, it's not a gradual process. It's been a very short, sharp, and steep decline. So it's kind of natural to be scared during a recession, with all this uncertainty and all this doom and gloom around the place. But I don't know, maybe I could start with you, Conway. There's all these negative sentiment out there. Is it possible that good things can come out of a recession? Is it possible that we could have positive outcomes here?
Absolutely. Personally, I think that sort of a recession is such a fantastic opportunity to, you need to be prepared for it though. So you need to make sure that you've dug some wells before you need the water. So if you're in a good cash flow positive position, or a nice position with a bucket of cash that you can use to go and invest in some property, well then a recession's great. You can get things at a discount. The main thing that I think of is just making sure that you can finance it, because your biggest problem is going to be, there's going to be bargains out there. The biggest problem is going to be, can you secure your finance against it? I remember back in 2008, I had just finished working, and in 2007 was when the first time I was sort of semi-retired. And I lasted about 8 months when the recession in 2008 hit, and I was back in full-time work within about 2 months after that, because basically all the banks were saying, look, we loved you when you were working, now we don't want to look at you. I had good cash flow gearing, cash flow properties, heaps of equity, but taking out your personal income made a huge difference. So basically, I knew I wanted to continue with property. The only way I could do it was get back into a full-time job. So I did that, got back into full-time work, and then I was able to borrow and go out and look for some bargains, basically.
Yeah. And so, I mean, all the talk is that this recession is different from that last one, at least on the banking side of things, because that recession was caused by a collapse in the banking system.
Sure.
And in 2008, we had huge banking institutions, massive organizations, just absolutely going up in smoke. And so the very question of banks, the very viability of these major institutions was under question. And so the banks weren't even confident enough to lend to each other. So there was no flow of funds between the banks. And that just ended up just freezing everything up. And so finance was very hard to come by, right?
Yeah, absolutely.
Yeah, like you've said. I mean, how do you see it being different
well,
this time around?
Yeah, interestingly, I just saw an email come up this afternoon from interest.co.nz, which was saying the Reserve Bank was considering slackening off the LVR restrictions, so, and I can also see interest rates dropping out interest rates. It's going to happen. They're going to try and keep as much money in the economy as they can. Obviously, tourism is going to disappear. So we're going to need to make sure that we can keep the country running. Spending in the economy is going to be important. So, interest rates are going to drop. It's going to be interesting to see what happens with rents going forward. My general philosophy at this point is to keep all my general philosophy always is keep all my tenants happy. I've usually done a sort of a 5% increase in rents on an annual basis. I imagine coming up to this January period, I don't think I'll be increasing any rents. I think I'll be hanging on to all the good tenants I've got and keeping them happy. So, I think that's going to be key to it. It's just keeping the good quality tenants. And, as long as you've got good state, as long as we're in a good advantage in Wellington because we've got a lot of government employees. They're going to be supported through this. So, there's a good percentage of people that are going to have jobs, even if the rest of the country is suffering a little bit. I think we're kind of insulated here, which is going to help us. And I've always been quite bullish about Wellington because we've got government here. So yeah, I think that as long as you've got your good cash flow, as long as you've got you've dug some wells and you've got some good revolving credits you can draw against, and you make sure that you can fund the properties that you want to purchase, then by all means, that's the positive outcome from my point of view.
And so you suggested that you think interest rates are going to fall. I mean, can they get any lower?
Yeah, well, absolutely they can. I don't think we'll get into negative interest rate territory, but
right. Amazing.
I wouldn't be surprised if I see a few interest rates, but we're already low threes. So 2.5%, 2.1%. Why not?
Amazing. Well, I mean, mind you, if you're paying only 3%, how much difference does it make going to 2.5%?
Yeah.
But then again, perhaps you look at it.
It depends what happens with. It's going to depend on what happens with property values, obviously, because if we're in an extended period of say between 1% and 2%. What's going to happen to values if rents come down a little bit, but there's still a big demand, so we can still get a premium rent or a solid rent. Yet we'd be looking at such small yields. Potential for valuations to be looking pretty rosy, provided there's enough demand to.
Yeah. That's the thing. I mean, people will become a lot of buyers will become rather scared and nervous about buying in this sort of environment. And when there's an election, a lot of buyers and a lot of sellers, for that matter too, decide I'm not going to take any action of any kind because there's some uncertainty around. Well, that uncertainty ain't nothing compared to the uncertainty we got now. So I think the market's probably going to a certain degree, it will freeze up a little bit in the in the coming, as we come out of lockdown. Volumes will certainly be low, volumes of turnover, that is. But prices are very slow to move, and vendors are typically very reluctant to sell their property today for less than it was worth 6 weeks ago. So whilst equity markets have fallen by 30% around the world, and some buyers, a lot of buyers might, fair enough, be thinking, gee, I'm not so sure I'm going to pay this $1.25 million for that, whatever that villa in Kilburnie or whatever. The vendor is not going to be saying, well, equity prices have dropped by 30%, so it's reasonable for me to expect my house value is going down by 30% too. They will not be thinking like that,
it's going to completely depend on how long this thing lasts for. Are we looking at, hey, we've dipped right deep into this recession, we're only, 3 weeks in another 6 weeks time, we're going to be looking back going, oh, that wasn't so bad after all? Or are we going to be going, hey, this is just the very beginning of the beginning, and we've got years of problems coming up? In 6 months or in 8 months or in 12 months time, where's the property market going to be at that point? And if unemployment's up and people are really struggling, then there's going to be some people that need to get out of property, especially ones that have, especially the first-time buyers that haven't necessarily got a lot of equity built in over time. Interest rates are still going to be low though, so because it's not a banking problem. So as long as interest rates stay low, then
interest rates are low, and the government's offering extremely good aid packages, and so any real pain is likely to be at least delayed. By 6 months. I mean, the number of jobs that we're going to lose here in Wellington will be less than a lot of other locations because, as you've pointed out, we're a government town. And so, yeah, I just think that what will happen in the property market probably will be that volumes of sales will drop significantly, but not necessarily prices. Although I think there's likely to be downwards pressure on prices. Prices are not likely to be pushed up as a result of this. It'll be the other way around. But no, it's awesome, your thoughts there. Maybe if I could direct this next one to you, Matthew. So Conway's talking about the positive output, positive potential of recessions like this. From your perspective, what is the number one thing you need to take care of and focus on really closely to guarantee you can survive the recession?
I don't think there's anything specific you need to focus on. Just the usual things, which are ensuring that your flats and your houses are full, and that the tenants are reasonably happy, and the rent's getting paid, that you can service your mortgage, and you're looking after the place. So at the moment there's a bit of uncertainty, but for the moment all we can do is just keep doing what we have been, basically, and focusing on the cash flow, getting not that you can increase the rents at the moment, but just ensuring any flat or house that you have is occupied and you've got income coming in. And if you're on that sort of borderline situation where you need a bit of cash flow, maybe talking to your bank to change your loan repayments back to interest only instead of P&I repayments. So just taking care of yourself from a financial perspective, look at it as a business and make sure you got more money coming in than you have got going out. And so long as that is the case, then basically you'll be fine. You've got nothing to worry about. So for my own rentals, I had a run of people moving out of the boarding houses, but in terms of the tenants themselves, the occupancy is excellent in the flats. The only vacancy I've got is a place that we're renovating at present. I'd have to say the default and the rents, we've got over 100 tenancies, is actually, I'd say, a little bit less now than it has been before. I'd actually have to say that I've got less defaults now than before. And this is just my theory. I believe that tenants can't have the boozy nights out. They can't go to restaurants. They can't go to get the takeaway coffees and go to the patisseries and fill the car up with gas and have a trip away to Queenstown or something like that. So people sort of hunker down at even online shopping. You're quite limited with that. You can't go to David Jones or the Warehouse or wherever you go to. So besides supermarket shopping and maybe the pharmacy, all you've got is the rent that you can spend your money on. So so far, touch wood, the rent's looking pretty good. I guess time will tell once the this 12-week wage subsidy ends and the unemployment data gets updated. Then we'll know what the future is like. But so far, the past 4 weeks has been good from my perspective. Yeah.
Yeah, well, so buried in that that wonderful, excellent response you've just given us there, Matthew, was a magic word beginning with C and ending with W.
Yeah, cash flow.
Correct. Yes.
Okay. Yeah, well, that's where it's at, isn't it? I did a talk, whatever it was, a month ago, and that was the focus of it. Just concentrating on cash flow. You're just like any other business. You want your income up as high as possible and your expenses low, and just treating it like a business. So now is the time, more than ever, where you want the cash flow. When something comes up, you get a vacancy, you get a big expense coming up, there's some sort of crisis on your hands. The people that have the cash flow would be able to fare better than the people with maybe good equity but less cash flow. So it's a little bit late now. Now that we're already sort of in the situation we're in, but now is as good as time as ever just to look at your situation and see what you can do to improve things, and just getting yourself in the best financial position as possible. A, to make your payments, and B, maybe if there's an opportunity that comes up, and maybe you can go for it. Yeah.
So, I mean, you've always been, into your cash flow. That's the number one mantra for you. And so, you're in no doubt a pretty healthy position now. And when your cash flow is strong, it doesn't matter what your houses are worth, right? Because the banks, all they're interested in really is that you can carry on paying them. So if you've just been focusing on cash flow and you're in a good cash flow position, then your situation is going to be okay, fine. What about if you're not, though? What about if you've just bought regular properties that have been yielding 5% or whatever the case may be, and you now find yourself, even if you have got the tenants sitting there, but you're concerned about, maybe you're concerned about losing your job, maybe some of your colleagues are getting taken down to 80%. Of your wages or something like that, and you're nervous about the cash flow in the future. What can you do to, if you don't have the 8, 9, 10, 12% yielding properties, what can you do to shore up your cash flow to make sure that you do survive? Because, I mean, I don't know, my philosophy is always that there is no question this will end, right? Mm-hmm. This is going to end. But is it going to end in 6 months? Or is it going to end in 6 years? And how much pain is there going to be in between now and then? All these things are uncertain. But as long as you're standing, whenever it is that we do come out of this, you'll be all right and you'll profit from it, right?
Yeah, probably the long term.
Yeah, all you need to be doing is be still alive. Right?
Yeah, property is a long-term investment. Yeah. So you got to go on with the long view, of course. Yeah.
Yeah, that's right. So, but the point is, you don't know how long that's going to be or how deep we're going to go, and so you need to focus on survival. And if you can just survive and still be standing at the end there, however long that might be, you'll be okay, and you'll be able to profit from when we do come out of this. So, if you're in that situation where you don't have this big cash flow coming in off all your properties, you are a bit nervous about your small business revenue or your job or that sort of thing. What can you do to ease the cash flow concern and make sure you are standing at the end of this?
Yeah, well, with the interest rates being so low, you'd have to be trying pretty hard to buy a very low yielding property to be in negative cash flow with your interest rates around sort of 3% as they are at the moment. But as Conway mentioned before, the banks love the salary earners and the PIA people, especially working for large reliable organisations and government departments. But at the end of the day, I think that the incomes from rental property would be more reliable than a salaried income, because the house or the flat is always there. You can always rent it out, whereas your salary, depending on who you work for, it could be gone at any moment in time. So people still need somewhere to live, and the rent's still coming in. So I think we should be thankful that, unless we own a supermarket or a pharmacist, I think we're definitely up there in terms of residential property investment with, what sort of business we want to be doing, where we want our money to be invested. So I think we need to be a bit thankful that we are sort of residential property investors, because there's not too many better things than that. If you had some other business or commercial property, I imagine, I'd be a bit more concerned if I had commercial property with vacancies there. The good thing with residential property is someone moves out, if it's empty, you drop the rent $20 a week, $40 a week, and presto, you'll get someone in there. It's just a matter of decreasing the rent slowly until someone comes in there. If you have a commercial property, a warehouse or a factory or something like that, a childcare centre, and they vacate, then your income will go to zero, and you can halve the rent or give people free rent, but you still might not find a tenant to fill it. So I think we just need to appreciate the benefits of being in residential property. Just ensuring that it's occupied and keeping your outgoings under control. Most of them are pretty fixed, so it's kind of hard to sort of beat down your expenses or your staff costs or anything like you could if you're in a business. The only one that I could think of was if you are in trouble or you're a bit concerned, just talk to your bank about moving your loan from a PIA loan, if that's what it is, to an interest-only loan, just to sort of free up a bit of cash flow, if you need to, rather than the mortgage holiday.
And indeed, if you go from P&I to interest only, that does make a big difference.
It does. It's huge. It could be $10,000, $20,000, $30,000 a year, depending on how much you borrowed for your property, and that could be the difference between keeping your head above water or not. And I think in the current environment, the banks are pretty receptible to receiving requests for that. They want to toe the line and help people out and follow the government directives to keep people's head above water. So if you need the help, then that's a good path to go down.
But you make a bloody good point about the distinction between commercial and residential. Residential is kind of, I don't know, it's the classic adage is that residential is just a pain in the backside. It's hard work because of managing all those tenancies and fixing broken toilets and all that sort of thing. It's just a pain, and commercial is so much easier to manage and all the rest of it. But for sure, you mentioned warehouses or childcare centres, whatever. Warehouses are probably not so bad, but I don't know if I'd want a bar in Queenstown at the moment.
And even the offices, you'd have to wonder in
the
future.
Offices, exactly, yeah.
Where's everyone going to be working from in sort of 3 months' time, 6 months' time? Maybe the businesses will decide that, hey, they kind of like this, having people work remotely. They don't need to pay for A-grade offices at some astronomical per square metre rate in Featherstone Street or Lambton Quay, and they'd be quite happy to have people working from home and working flexible hours and so on. So commercial, I'd be a little bit more concerned. It sounds good, and it's a bit sexier being in commercial than it is residential. But it's times like this that even though you get the block toilets and the moaning tenants, that you appreciate the certainty of income, basically.
Yeah. Indeed, some of our members do have commercial properties, and fingers crossed that they don't have tenants in too much trouble. But I've heard of investors who have major commercial investments with big nationwide names I think it's mainly in the retail space. Big, I don't know who they are, but no one's saying any names, but big nationwide names who have just written to them and said, just letting you know, I'm not paying you any rent until I change my mind. I'll let you know. See you later. Now the problem is, you think, okay, well, they're in breach of their lease, but if you kick them out, it could be 3 years without a tenant if the recession goes on.
That's the thing, and once it's vacant, if they do move out, or once there's a vacancy, and a whole lot of other businesses close down, there'll be 20, 40, 60, 80 places on the market that someone might want to rent. So if they are going to rent your one, you're going to have to give them some incredible kind of a deal to be able just to get them in there. So
So for sure, one thing would be that, I don't have commercial property myself, but you certainly want to make sure that you do everything you can to keep that tenant in there, right? Paying any sort of cash flow, because getting it relet is going to be very, very hard work.
Yeah, definitely.
Yeah. Awesome, Matthew. Thank you. Hey, Peter, what about you? Anything you can add to that in terms of managing cash flow, that magic word that starts with C and ends with W? If you are under pressure, if you are feeling a bit nervous, what can you do to minimise this risk and make sure you're standing when we come out of this?
Yeah, I think there's the guys before me have covered off, I'd say, most of it, if not all of it. Definitely agree with moving the principal and interest to interest only to keep your head above water, and that's about what it is at the moment. You're better off having a property rented than not rented, for sure. So, you sometimes see a lot of people just hanging on to try and get that top dollar for rent. It's a false economy. You've got to get your place rented to get it through, to buy you time. I think compared to the last couple of recessions, I still feel, maybe I'm wrong, and I still feel this isn't as bad from an investor perspective. It's not an equity crash. It's more of a cash flow crash at the moment. Oh, I wouldn't say a crash actually, but a challenge. And it will have impacts to various parts of the market, not necessarily across the whole market. And I agree with you before to say, that the property prices are likely to, they probably won't go up, but a lot of them won't go down either. So the stuff that we look at in cities, where you're getting a yield, absolutely, I don't see much movement in those property prices at all.
Unless the tenant market dries up, presumably.
Yeah, I was just about to cover that off. So the challenges that we've got going forward, I think, is around the rental. There's no secret that I'm into a lot of the student market, not first year students. That's for the halls, but second year and the young pros in Conway as well. We're into that market, and a lot of those students get, they're getting the student allowance now. They're still getting it. A lot of them substitute or augment their allowance with working in hospitality, and that's dried up. So there's some pressure on them to be able to survive. And to me, it's just working with each of your individual tenancies to make sure that you've got a good working relationship with your client. They're really your client. I mean, they're your lifeline when you're doing it full time. So I don't think there's a right or wrong answer, but I think the key is to keep your property rented if you can. If it's vacant, we can talk about that as well, but to keep it rented and secure a long-term tenant. Maintenance is a key coming down the track, and what Matthew was talking about before in Conway is about keeping that revolving credit or the access to funds available. So what we'll find, there's the Healthy Homes Bill as well, which is helping raise the bar. But, if there are people leaving and vacancies or whatever, I mean, if your property is presented well, it's always going to rent. People are going to need somewhere to live. So, I don't see it as a big panic at all. It's just, stay the course, and probably more interaction early on if you haven't already, through your property manager or the tenant directly, just to understand their circumstances and how you can work together through this. So there isn't a magic bullet. It's the costs of your interest and principal payments, and the incomes you can't change rates. I don't see rates going down. They're not going to give you a rate decrease. Insurance-wise, our market's a little bit fickle. We've only got 2 or 3 insurers in Wellington. In the past, I've grabbed all my properties and thrown it out to tender to those people, and have had a good, I think I had a 20% saving on my insurance premiums. But you can look at that as far as
if you've got enough scale.
If you've got enough scale, but other than that, you can also look at your insurance when it comes up from let's change the excess. Make sure with the new tenancy rules, you've got an opportunity, I guess, to increase your excess if you want to take that risk. Maybe increase your sum insured because you're basically insuring against earthquake and fire. Really, there's damage can be covered off in other aspects. So you might be able to reduce your premiums a little bit there, as long as it's not false economies and you're doing it the wrong way. But they're your only costs. So treat it as I think Matthew said, treat it as a business. Look at your outgoings, look at your client, and work through the period ahead. There will be opportunities. There are going to be less people looking and nervous. More so, I think, around the funding. Although the LVR's effectively gone, it doesn't actually mean that much, really. It's a nice to have. It's a safeguard, but I think each bank individually has their own servicing criteria. So I think there could be quite a variance in what each bank is offering, and that's changing, I think, almost on a daily basis. Some banks aren't taking in new customers, and and other people have different serviceability, and they're looking at the income as of now, as not what it was a month ago, but what's your income now. So it's just keep across what's going and massage it to get you through the roller coaster in the next few months until we know what's going on. We know that the borders aren't opening. We know that, and we know interest rates are guaranteed to be low for another year because they're not moving from 0.25 on the OCR. So there's a lot of knowns here already where we didn't have in the previous recessions. So I think this is not as bad for us at all. I'm quite positive about it.
So Pete, one thing you've mentioned, and the others also have touched on it, is that you don't want to be holding out for top dollar on your rent. Well, when I say, obviously you want every dollar you can get, but sometimes people do say, well, I was renting it for $1,000 last month, I want $1,000 now, and it's not there, and it's not there, and it's not there. You haven't said it expressly, but I gather what you're suggesting is you've got to quickly move to take the market price.
Exactly.
Otherwise, it'll cost you way more in vacancy.
Absolutely right. That's exactly what I was inferring. There's no point holding on at the moment. You want it rented, and you want an income stream.
Yep. And so that's awesome, Pete. What about capex, capital expenditure on your properties? I mean, is now the time to look at making improvements to your properties? And
well, I think absolutely. I wouldn't be throwing money away at it, of course, but with the purpose of either improving your property to make sure it gets rented. You wouldn't do that when there's tenants in there now. As a general rule, you take the opportunity now to try and improve your property, increase the value of it, obviously through increased rent, and that could be anything from a second bathroom or to another bedroom. But from a capital perspective, with the changes the Ministry of Finance, Graham Robinson announced, there's a $5,000 asset write-off until I think the 17th or 18th of March. So things like a heat pump now, if you've held off with a heat pump, it's not a bad time to do it because it can expense it. So it can offset some of your profits as opposed to going on your balance sheet. So any single purchase or through a shop or whatever it is up to $5,000. So yes, you could take the opportunity to do that if you needed to. But again, I think a lot of it's talking to your tenants and understanding what their needs are and helping them through. They'll take that as an absolute positive as well, that someone's caring and willing to work with them, and just keep away from the media and that stuff because that's just so negative. But I hear a lot of good things happening with landlords and tenants, and the relationships are probably better now than I've heard of for years because of the interaction that's happening. There are a lot of positives to take out of this.
And presumably, your points about capex and making improvements are good ones, but presumably if someone is tight on the cash flow and it's not straightforward to raise the funds, then that would be a way also of preserving cash flow, is to delay any capex that you were intending to invest in the next 6 or 12 months. Just hold on to that 20 grand in your back pocket and use that as a safety buffer too, perhaps.
Oh, absolutely. And I think we shouldn't underestimate how difficult it's going to be in the next month, I would imagine, if not longer, to get anything done. I'm also in the middle of a big reno as well. Over $500,000 of this renovation so it's fairly substantial. I had all my gear on the back of a truck. It was meant to be delivered on the day before the lockdown. It wasn't because of the lockdown. Now I found out that everything that was on that truck's obviously gone back to Mitre 10, and now it's all gone. Now the shelves are pretty much bare for builders at Mitre 10, Places and Bunnings. So they've got this week to try and restock. But then, of course, up the manufacturing chain is like, well, who's producing it? How's it going to get down to restock? So there's, just ordering a heat pump and expecting it to be delivered next week. It might not actually happen that quickly. So I think you've got to take all of the whole supply chain into account around timing and rentals as well. Yeah.
Mm-hmm. Awesome. Hey, thanks, Pete. That's awesome. Maybe I'll go back to you, Conway. So all three of you have sort of started to touch on perhaps how this recession might be different, and indeed no two recessions are the same. But can you share more about what you see in this space in terms of how this recession might differ from the others, and perhaps touch on how Wellington might be placed because of the difference in this recession compared to others?
Yeah, I mean, I think something you mentioned earlier, Adam, which was the fact that this recession has not been created by a financial instability. It's been created by a virus which is causing havoc. So I think the main difference is going to be that because the banks are solid, we're going to presumably, once the economy gets going again, I think that the borders being locked down is obviously going to be, it's going to be interesting to see what happens in terms of migration. New Zealanders, are they going to decide, hey, look, it's time we go back to New Zealand because we've been living in London, we've been living in the States, and both of those places have had horrific death rates. So do we actually want to go, actually, it's time to go back to New Zealand? They only had half a dozen, a dozen or so people really badly affected by this problem. And they're able to insulate themselves from the rest of the world and sort of have the economy running. So, I think that for those big cities and the massive population density cities are going to have a lot more of a problem than we are.
You mean cities outside of New Zealand, other global cities?
Yeah, absolutely. Yeah. I mean, you look at the figures in the States and it's horrific.
No, it's horrific. Yeah, I mean, I don't know. I cannot help but think there have got to be a whole lot of New Zealanders who are overseas in these major cities that have been suffering badly. You just like the classics. London. London and New York, I suppose. I mean, they're doing quite badly, but there are many others, and there are lots of Kiwis, because we all love to travel, who've been over there for 10 years, 15 years. They went over there single. They've now got a family of 4. They've made a bit of money, or a lot of money, and their kids don't have relationships with their grandparents, and now they've got this huge health issue. I can't help but think there's got to be an armful of people who just decide at the end of this, look, as soon as I can, I'm just going to go back to New Zealand. Yeah. My kids will have relationships with my parents. I'll take a pay cut of 50%, and I don't care.
Yeah.
And one thing's for sure, I don't think you'll find many Kiwis who are living here now who are thinking of going to New York anytime soon.
And I'll tell you, another thing, I guess, coming back to the Wellington-centric side of it, I've got a place at the moment that I'm advertising for. And it's interesting looking at where you're getting inquiry from. So I've had a bunch of inquiry from people that are leaving Queenstown because they've been in hospo jobs. I've had a bunch of past tenants that have been asking me, hey, look, we're coming back to Wellington. We've been on our OE. We want to come back and set back up in Wellington. So
as soon as we can get back in.
As soon as they can get back in, yeah. And I was quite surprised at the number of inquiries that I've had. It's a little 1-bedroom place in Newtown, and I've probably had about 15, 16 positive inquiries about it. So it sort of feels like a February kind of busyness. I wouldn't say high peak of January busyness, but it's certainly, it's there's certainly people out there looking. So if you do have something that becomes vacant, don't be too worried about the demand at the moment, because it seems like there is a good demand out there, and I haven't reduced the price on it, so it's still.
I mean, that's very interesting. In the face of this lockdown and all the uncertainty that the world is facing at the moment, you've got a property that's in Wellington, you haven't decreased the rent, and you're getting inquiry as normal, including quite a bit of inquiry from overseas, mainly Kiwis coming home. It's too early for people who aren't Kiwis to consider coming into New Zealand because the borders will not be open to them for some time.
Yeah.
Presumably, I'm presuming that it won't be until there's a vaccine, which might be 12 months, might be 18 months. So that's a long way off. But yeah, a lot of Kiwis, I can't help but think, but as soon as they can, they will up sticks and come home. But interesting, you've said that a bunch of people inquiring from Queenstown. Of course, Queenstown will be really hit hard at the moment with basically no international tourism. Well, no tourism of any kind at the moment, and no possibility of international tourism in the next medium-term future. So, those people too, they lose their jobs. They want to retrench back to their hometown, even if they don't have a job. They'll still need somewhere to live. So, yeah, interesting stuff. What about? There's been a lot of talk about Airbnb. Any one of you got any particular thoughts on Airbnb and Airbnb coming back into the market and impacting the long-term tenancy market? I know I've spoken to you a bit about that, Pete. Either one of you two, Pete or Matthew, you want to say anything about that? Do you think it's going to be a big problem for Wellington?
Look, Matthew's got a lot of boarding houses, so he'll have an interesting view as well. I think that, it will make a bit of a difference, but I don't think it's going to make a lot. Traditionally, I guess the Airbnbs are one bedroom or fully furnished. And Wellington, again, is quite insular in that perspective. We're not hit, the 95% that Queenstown and even central CBD in Auckland are hit. Don't forget, as we came into this, there was an absolute over demand for these properties anyway. So I guess to quote a term, it's really softening the blow a little bit. I just have that feeling it's not that bad as from an Airbnb perspective, as in the short-term rentals coming onto the market as a standard rental. If they do, or if they're left vacant, it just depends on people's circumstances. But I think in Wellington, it's more insular than other areas, and it may make a small impact for one bedroom, but don't think it'll make much of an impact at all. Not the doom and gloom that we're hearing anyway.
I don't know, have an Airbnb. I've never been in that space. I've not wanted to get involved because it's, I don't know, I prefer to stay away from things that are relatively untested and untried, and I've been nervous about the GST rules changing on us and all sorts of stuff like that. Plus, it's a whole lot more work. But for a start, the Wellington economy is not driven by tourism.
No.
So that's not what's filling up any Airbnbs that are here in Wellington, at least not compared to a lot of other places around New Zealand. But there must be a bunch of Airbnbs that perhaps go to business people who are coming in for a few nights here and there and that sort of thing. But certainly compared to other places, I can't imagine it's big. And as you said, yes, I believe that Airbnbs tend to be the one-bedroom places, the studios. They're there essentially to replace hotels. They're not 5-bedroom flats, 3-bedroom flats, and they're not houses or flats in the suburbs. They're one-bedroom apartments where you can stumble out of bed and roll down to the waterfront, right? So, in that respect, it doesn't seem to make sense that it's going to have a huge impact on the long-term rental market in Wellington. No, and I noticed there's a comment from Andrew here, claiming that there's some report from somewhere or other that suggests there's only 2.5% of properties in Wellington are Airbnb. 2.5%, I don't know, 2.5% of rental properties or 2.5% of every property. I mean, if out of 1,000 properties in Wellington, 25 of them were Airbnb, I would have thought that was a lot.
Look, I think, domestically, as you point out for Wellington, there are a lot of people travelling domestically as well that use Airbnb and coming in for concerts, functions, things like that. It's a hotel substitute, as you say, bring friends and family. So again, if we open up domestically at some stage, then there's likely to be demand for that as well. It may feel, I don't use Airbnb very much, if at all. It's likely to feel maybe safer than a hotel, I guess, but from a COVID-19 perspective, but I don't think it's a big thing for Wellington per se.
Yeah. And Matthew, what about you? You mentioned that you had a few tenants vacate some of your boarding house rooms. I mean, obviously you've got 150 rooms, or got a lot anyway. So you had a bunch of them leave. I mean, who's been leaving? What are you seeing happening there, and what do you see happening in terms of getting them filled in?
The boarding house tenants tend to be a bit more transient than the longer term tenancies. We're not entitled to have fixed term tenancies in any of the boarding houses by law. So we have quite a few, maybe sort of 10% of the people are sort of Europeans from some South Americans, Dutch, French, and places like that. So in the week leading up to it, there's a bit of an exodus from them getting on the flights to get home while they could. So a few sort of students and people like that, they thought, there's lockdown's going to happen, so they'll go back to mummy and daddy and just be a bit happier there and not have to pay the rent, seeing as varsity's going to close down. So the week or sort of 5 days leading up to lockdown, we had several people moving out each day. Since then, we're still getting inquiries from people that are looking for accommodation, and people saying that they want to come around and move in, and as soon as the lockdown is down. So still getting inquiries. There still seems to be demand there. Basically, I'd say if with the recession that is coming, it's no different than any other recession in terms of people are losing jobs, there's unemployment, there's less money getting splashed around. So it's for a different reason, but basically it's just a financial thing basically when people are losing money. So I think with your bread and butter places, your 3-bedroom houses and your 2-bedroom apartments and your 1-bedroom flats and things like that, that'd all be fine. If you've got like a multi-million-dollar place and that sort of upper echelon sort of area, you'd struggle a little bit to get the top rent on those ones there. Maybe people will sort of double bunk and move in with parents, or move in with their friends to try and keep the costs down. So there could be a bit of that going on, maybe a bit of a flight to sort of some sort of cheaper accommodation. I don't think there's going to be a drop in the rents. People say that there's going to be a drop. I don't think that's going to happen. I don't think the supply's increasing. There's just a lot of extra expenses that are coming on. The rates are going up. My insurance has gone up 20% a year for the past 6 years. It sort of doubles about every 5 years. With the healthy homes bill coming in, there's going to be a lot of extra expenses for the rain shoods, extractor fans, insulation, which we've already done, especially with the heat pumps. I've got about dozens and dozens of flats, 75 flats, and I've got to put heat pumps in those. I don't know how much they cost, 3,000 or 4,000, so there's several $100,000 of expenditure to pay. So with all these extra expenses coming in, I don't think there's going to be a huge pressure on downward rents. Basically, I think they're going to hold there. I think with what we're experiencing, some people are going to say, hey, it's not looking so good, I'm going to get out of it. It's been happening before with the anti-landlord legislation that's been coming in. So if some people have been retracting, maybe with this one here, this sort of recession we're going to have, people may well pull out of the market.
Now this all impacts on supply. So this
that's right.
Certainly there's nothing happening at the moment that is going to encourage supply to increase. There's no question about that. I mean, my concern is that, it's interesting. You think that rents are not going to fall. I hope you're right. That'd be amazing. But certainly, you've spoken before about how you prefer to deal with your pretty ordinary rentals, right? Your ordinary middle of the road stuff that your average person with just a regular old job, not some high flyer, is going to want. And so when things go bad, there's always someone with that normal budget to find a place to live. Whereas someone who's I don't know, feeling rich because things have been going well for 5 years, and they rent the place for $1,500 a week in Roseneath, and it's all shiny and glittery, and it's got the nice views and all the rest of it. That top end of the market may well soften, as what you're suggesting, but your ordinary stuff, you think it's quite defensive. I just think that when there's a recession like this and people lose their jobs, or they come out of university and they don't get a job for 2 years, or they are, even though we're a town filled up with bureaucrats, bureaucrats are very, very risk-averse people, and even if the risk of them losing their job goes from 1% to 1.5%, they become slightly nervous and freeze all their cash flow and delay making decisions to upgrade their house or whatever the case may be. They make do with their 2-bedroom home for another 4 years, even though they've now got 2 children. They just put up with it. And the way I say it is, everyone finds a way to move into our Auntie Agnes's spare room. There's a lot of spare rooms around the place. And so a bunch of people, find a way to use this spare capacity without actually increasing the actual physical supply. But you're confident, you think that its rents are not going to...
I'm very confident.
So
I've been tracking my rents on an annual basis for more than 20 years. And in every single one of these 20 plus years, on every property, I've got more rent the following year than I have the previous year. Not 1 year in 20 years for all of my properties has it ever gone down or stayed the same. It's only ever gone up. So
wow.
It may be a miracle. It may be the first time in 25 years it hasn't happened, but so far it's looking okay. So I'm quite quietly confident. Yeah.
Amazing. So 2008, 2009, 2010, no softening of rents in your portfolio.
No vacancies, no rent decreases, nothing. It was just business as usual, basically.
Yeah.
I think we're a little bit because we're a little bit insulated with the government. There's quite a lot of government employees in Wellington, so we'd be less likely to feel it than people in some other cities would. But yeah.
Interesting. And most of your places, though, you do prefer to stick to the 1, 2, 3 bedrooms, don't you?
Yeah, that's right. So I just like the ordinary flats, the sort of the 1 and 2 and 3 bedroom flats, just the bread and butter stuff that's not too flash, not too crappy, just good places, tidy places, and good locations, and never seem to have any difficulty finding people to move into places like that. Yeah.
Yeah. And so some people, when the time is good, some people might criticise that strategy, claiming it's there's not enough cash flow, or that the yield is not high enough because you have to buy these things at a 6% return or a 6.5% return or that sort of thing. And with another strategy, you can go to 7%, 7.5%, or if you're lucky, or that sort of thing. But it's times like now, when the tide goes out, you see who's been swimming without their togs on, right? And you ain't one of them. It's a defensive strategy, is what you've been playing, isn't it?
Yeah, that's right. You just play for the long game, play for the cash flow and the long term, and try not to be too. If you read all the headlines and stuff, you'll go crazy. But you just carry on. Basically, I can't see anything getting too crazy. I think people are expecting more money to come in from the government, and people are generally expecting more support from the government to everyone that needs it. So I think the money's going to be there to pay for things until we get back on track. Yeah.
Just make sure you look after your cash flow.
Yeah, basically.
Awesome. Very good. And so thanks for that, Matthew. And Pete, comment.
One thing too, it sounds pretty obvious, but I guess one thing to point out is that it's all about the type of properties that people like Matt, myself, and Pete have been buying, and it's buying investment properties. A lot of people that have perhaps bought a 3-bedroom home with a single income source, in Karori or something like that, they're fine. But what we've been focusing on for the last 20 years is buying multi-flats or boarding houses where you can really get those multiple income streams, and that just de-risks it so much when you've got a 6-bedroom, a 4-bedroom, a 3-bedroom all in the same house. And I guess that's what's kind of given us that solid base to work from, because we've got those big income cash cows that have been sitting there for 20 years. So yeah, I just wanted to throw that in there.
Yep. Very good. Look, there's lots of stuff we could keep talking about. I've got a few questions here which have come in from our members, so I thought maybe I'll dive into those, make sure that we get those answered if at all possible, and then we can come back to our general discussion, which is awesome. So we've got someone here. I had a rent due to go up on the 30th of April, right, which could not go ahead for 6 months, correct? Because of the lockdown rules, correct? I think that's 6 months from the 20-something of March, I think that would be. I would have chosen to reduce the rent due to COVID circumstances, but not by the amount it was currently at. Okay, so the rent was going to go up, and yeah, I understand. The reason for having the reduced rent was because work was being done on the property and this had been finished. When can I give the tenants notice that the rent is going up again? I.e., do I have to wait till the 6 months is up, or can I give notice 60 days before the 6 month date, or can I give them notice now that it will be going up after the 6 month lockdown period is over? So I'll throw my 10 cents worth in for this. My understanding is that if it was a rent increase, then you cannot put that rent up until the 6 months from the 20 whatever it was of March, which pushed it into late September. If, on the other hand, the rent was temporarily discounted from the rate that it was at previously, you can revert it back to that previous rate as long as it's all understood that the rent is X, but we're temporarily reducing it to Y until such and such a time, and then it's going back up. That is not a rent increase. That is the removal of a discount. If you worded it with your tenant to say the rent is going to be X for a period of time, blah, 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 and then it will increase, then no, it's a rental increase, and that can't take place. But any of you guys got anything to add to that?
You're 100% right, Adam. Nothing to add. It's what's on the tenancy, what's on the rental agreement. Was it a discount or not? If it's on the rental agreement, you can't increase it from the rental agreement. That's my understanding as you've articulated.
Yep. So, I mean, I personally have got a place in Raumati. I had a tenant do a runner the week before lockdown. And I had a guy locally who wanted to take the place, but he was nervous about moving in and how can I get furniture in there and all the rest of it. And I said to him, if you move in this week, I will reduce the rent by 50% until we're out of stage 4 lockdown. So once we're out, that rent will be reverting back to the normal rent because it's not a rent increase. That was a temporary discount of the rent. So it all depends on how it's worded. Not sure who asked that question, but hopefully that helps. By all means, get in touch with us again if you want to talk further.
Yeah, I think the tenancy service as well. You know, I've regularly had to call tenancy services, and they're really good. You give them a call, you have a quick chat to them, and get it from their point of view, and then you know legally exactly where you stand.
Yeah, that's the right place to go. I mean, we could give you our experience, but probably you're right, absolutely right, Conway. Go straight to tenancy services.
I was just going to say, if you are signing someone up in a new tenancy agreement, you are better off to state that like you said, Adam, that the normal rent is say $500 per week, and then the rent is discounted to Y, and then going up to the normal rent, rather than saying the rent is $250.
No,
but
that's
after
right.
6 weeks the rent goes up to $500. So yeah, you do need to make that very clear in the tenancy agreement, just to stay on the right side of things.
Yep. Perfect. Another question: is it necessary to take photos at each property inspection? And how many and what of? So I'll chip in here, and I don't manage my own properties. No interest in that, thank you. But I am involved in our property management business, and certainly we take an awful lot of photos at property inspections, a huge number, and of pretty much everything as far as I can tell. But I would also chip in here and say that there is available for members a free property management kind of course that you can take. I think it's 10 or 11 modules. Should be available on our website, or if you can't find it, let us know, and we can. That's free for members, designed to assist people who want to manage their own properties. So, hopefully that would be of use to some of you. Any of you, Conway or Peter or Matthew, talk about that?
There's a really good app on the App Store called Simple Inspect. It's one that I developed a couple of years ago now, and it basically goes through with you and helps you kind of set up the rooms, and allows you to, prompts you to what to take photos of and that sort of thing. So, there are a bunch of apps out there. Have a look through, give them a try, and find one that suits you. I personally, I use it all the time. I also use MyRent quite a bit for all my tenancies. It's been really great in terms of communicating, especially in situations like this where you can't just go knock on the door and say hi to your tenants. To use MyRent, where you can, it really condenses all your communications to one portal. I have a lot less people texting me now. We just tend to go onto MyRent and communicate that way. They've also set up a facility where you can email, message all your tenants from one spot, which is quite cool. So if you want to send out a kind of a group message to everybody, and if you have to make any changes to your tenancy agreement, it's all done online. So you don't have to physically be there to sign things. So yeah, I would just embrace technology when it comes to your inspections and managing your tenancies.
Very good. So another member has asked, I have both a residential apartment and a commercial space available to rent now. Can I let people view them while maintaining social distancing when level 3 is applied? Okay, so obviously I'm keeping a track of this from a real estate agency perspective, and so perhaps it might be similar there. I know that what real estate agents are allowed to do is we're allowed to conduct meetings at people's properties. We're allowed, like appraisals or whatever. We are not allowed to conduct meetings in our offices, but you wouldn't need to do that to show people, viewings. I mean, I would have thought that you can run viewings of your property, but funnily enough, certainly as of this afternoon, we were waiting for advice from Real Estate Institute and Real Estate Agents Authority, to confirm, can we actually do private appointments to show properties? And they are unable to answer that question so far. They have said, we can't do open homes. They have, so no doubt you can't run a group viewing for your potential tenants at your property, but we can arrange a contractor. So we can arrange valuers, building inspectors, plumbers, whatever, to go through a property. So I see no reason why they should turn around and say, but you can't run a viewing, whether it be for a rental or for sale. So I'm expecting them to confirm that we can run viewings, but I haven't seen that confirmation yet. But any of you guys want to add to that?
Yeah, I mean, I would think it would come back to contact tracing. I wouldn't be surprised if we can hold a one-off viewing, but we have to make sure that we can get back in touch with the tenants and just be able to prove that we can contact trace them.
So I think the Real Estate Institute and Real Estate Agents Authority have yet to confirm that viewings can take place in level 3, but I'm certainly expecting that they will, because they have said you can bring tradespeople through, you can conduct meetings with the owners at their properties. So I'd be very, very surprised if they say you can't run viewings, be it for a prospective tenant or a prospective buyer. My
understanding is that you can show people through, just as long as it's individual appointments. You make a time, hey, I'll meet you there at 3:10, the next one at 3:20, that's fine. Just as long as there's no open viewing with random people sort of turning up and coming through simultaneously. But as we've seen, they have sort of issued advice and then backtracked on it or retracted it. So until you get the official confirmation, it's still to be determined, I suppose. Yeah, we're still waiting for the official word. Certainly as of about 4 hours ago, that was the case anyway. It might have come since then, but I haven't seen it. Another question, we have 8 tenants in total, 6 being in one block of units. Okay, so a block of 6 units. If we are asked for some rent relief, we're unsure whether that should be in the form of a rent holiday, lowering of the rent, and in both cases, whether that should be on a loan basis or at our expense. We want to be reasonable, but obviously we have expenses to cover. It's also an issue that having 6 tenants at the one property, there is potential for them to talk, and if we do it for one, we may find we have to do it for all. Your comments would be appreciated. So I've had 1 or 2 tenants approach me for discounts, not in a group of 6 like this, but certainly our approach is make sure the tenants are accessing the help they can from the government wage assistance, firstly, and then secondly from WINS. There are rental, housing subsidies and that sort of thing. So make sure, firstly, that's the first port of call. And then secondly, if they are in suffering genuine
financial distress for whatever reason, make sure you understand what that position is, so that you know that it's actually genuine, as opposed to them just trying it on. Because we, certainly at the property management business, we've seen a lot of tenants take that approach too. And when we've gone back and asked for more information, for the most part, the issue disappears. So there's a certain degree of just trying it on. But I guess in that situation, yes, you have to be careful that whatever your rule is, it's a rule that is consistent across everybody. But I guess it's just up to a question of negotiation and what you feel comfortable with. It all depends on how much room you have got to move as well, doesn't it? But what about you guys? Any advice you can offer this person?
Yeah, I'm familiar with this one. I think, yeah, what you said is right, Adam. I think the way I've approached it with my tenants is around, first of all, making sure they've got the right level of support. And if they can prove through documentation how they've been impacted, if it's been, that they generally cannot afford to pay the rent or whatever, then you've got a couple of options. One is to obviously give them a rent decrease if you choose to, and the other is you could give them a rent holiday where you might reduce the rent by say $20 or say $50 or whatever it is, $50 a week. But then at the end of the holiday, then just like a mortgage holiday, then they have to pay that $50 a week back, drip feed it over the upcoming 6 months or 8 months, as it were. So there's probably no one answer. It's again, like I said before, it's about understanding what their actually needs are and how they've been impacted, and how you can get out of it together. But you got, as I say, you got the choice or a combination. I've done that with one tenant. Actually, give them a rent reduction, also give them a rent credit, rent holiday for special circumstances, but only one. And the rest have all been fine. So, if they've got hardship for no fault of their own, and you offer up that holiday, you're not actually giving them a rent reduction because they're paying it back. And I don't think that's going to impact the other tenants if they do find out, because they're not getting free rent. They're not getting cheaper rent, as it were.
But certainly you'd have to have the rule apply to all six, right? Because they're bound to talk to each other, and just make sure that whatever the process is, it's a fair process and it applies to everyone.
Exactly.
It's not just a carte blanche. Here we go, 50% off your rent.
No, not at all. And when one person, I find that with the students, that's one person
around, they do talk to each other, and I've had this happen to me before, where you give someone a discount or a better deal, and they'll talk to each other. It can only be a matter of hours or days until the neighbour comes to you and says, "Hey, Bob next door he's only paying $3.20, why am I paying $3?" Then you have some conversations. So it's better off just to similar sort of style, just keep them all consistent, and then you avoid any sort of awkward conversations later on.
Yeah, and I think in this situation it's a block of 6 units, so certainly it has to be a uniform approach to everyone. But at the same time,
so I'd be a bit hesitant in that case if there are 6 units. If you give a decent discount to one person that is experiencing difficulty, other tenants they will find out, and then they will also be claiming difficulty and expecting the same discount. And if it's not forthcoming, they will feel hard done by. Why is someone else getting some benefit that they're not? So I'd be more inclined to say to the person that's having difficulty, hey, if you have genuine difficulty, if you certainly can't pay the rent, then hey, just don't pay the rent, or pay what you can. And we're not enforcing any sort of measures against people that don't pay their rent, so it's just all going to be dealt with in the future. So not specifically telling them that it's okay not to pay the rent, or that there is a discount. They're sort of pushing it back to the future and deal with it later. Yeah.
All right, very good. So I know we've got a raised hand from Aveen. Dana, do you want to let Aveen ask a question?
Yeah, Aveen, you can go ahead. I've unmuted you now.
Oh, hi guys. Thank you very much for the talk.
All good, Aveen.
I've got a bit of a doomsday story kind of thing, a question. You guys seem to be very solid and confident about the banks and other financial institutions thing. But I was thinking, after say 12 weeks, when the government subsidy goes down, and a lot of people are going for a loan holiday and not paying the principal part of it, and they will probably come to know maybe 12 weeks, 14, 16, 18 weeks from now that they're losing jobs. Do you think there could be a domino effect from that?
Any one of you in particular want to answer that one? I've got some comments I could make, but I'll leave it to you.
Okay, I was just going to say it's hard to know. I think that's the point too. That once the 12 weeks is up, I guess that's when the tide goes out and we know who's got money, who's got savings, who's going to pay, who's not going to pay. So I think that'll be a bit of a turning point once that's up. I think it's the intention of the government to get as many businesses back operating by then as possible. They gave themselves a bit of leeway in terms of the 12-week period. But it's entirely possible that there could be some effects, some job losses, and some people are unable to pay rent. At the end of the day, people will still need somewhere to live, so they may be moving from one premises into another place. But not too concerned about that at this stage.
Yeah. I mean, my view is, Aveen, absolutely, you're bound to get some people who are going to lose their jobs or lose their income. I mean, that happens ordinarily in life, and we can't go through a recession without people suffering. It's just going to happen. But in Wellington, we will be cushioned from the blow compared to most other places for several reasons, many of which we've already touched on tonight. Firstly, our economy is not tourism based, and we've heard many stories tonight of people who are tourism based and staff are actually returning back to Wellington. That touches on a second point, which is that when there is a recession, generally people tend to withdraw out of the regions and they return to the safety of the city. Obviously, Wellington is a city and a stable city with multiple employment opportunities even during a downtime. And so that will favour the cities, including Wellington. And then thirdly, again, we've touched on this, and the guys on the panel here have touched on this, that an awful lot of employment in Wellington is government-based. Well, government employees are not going to lose their job in this time. Well, the rate of people being fired out of the government or council or quasi-government will be very, very low during this time. And in fact, there's an argument that would suggest that the government payroll will increase because the government takes on, at least this government, I believe, is doing this, will take on the job in part of stimulating the economy to soften the blow of the recession. And so that means spending money, not firing people, if anything, hiring them. So, I mean, my personal view is that Wellington, whilst we will not be in a boom time anymore, it will still be a recession, but we ain't going to feel it anywhere near as badly as elsewhere in the country. But, time will tell how painful it's going to be. It just won't be as painful as elsewhere in the country. Does that answer you?
Oh,
Comment here.
I think something to add to that is what's going to be interesting to see is what's going to happen with the student numbers, because one thing we do have a lot of in Wellington is students. We've got international students, we've got Hawke's Bay, Auckland, whatever, all coming down to Wellington to study. It's going to be really interesting to see what the university is going to do, not only from level 3 forward, which we kind of understand what they're doing basically, unless it's essential, you shouldn't be going into your classes. It's going to be interesting to see what happens further down the track coming up January. Are we going to have this massive influx of students coming into Wellington, or is everyone going to be doing study from their parents' home in the Hawke's Bay? I think that's going to be something that's going to potentially have an impact on the market.
And certainly I was very worried about possibly the idea of universities closing for the rest of the year, for example, and having students just disappear out of the city and stop paying rent on their properties. It certainly doesn't seem like that's happening. And from me talking what I understand of several places I've got with students in it, a lot of them did go home, leave town for a period of time during the lockdown, but they're all planning to come back, even though they aren't going to be physically attending lectures. They will be doing their online learning. They'll still be doing it from their bedroom here in town, back to their normal life as much as possible. But, good point that you raise about next year. Will it slow the students down next year? But that being said, Peter, you raised a good point before too, which was that, universities are going to be open next week, but halls of residence are not. Well, where are these tenants going to go that were in the halls of residence? Are they presumably most of them will, or the ones who can, who are, well, my daughter was in one, but we're in Wellington, so she's just gone back to her mum's place. But there'll be a bunch that are from Auckland or Hawke's Bay or whatever else. Where are they going to go when they can't get back to their hall of residence? Are they going to come and try and find a flat down here in Wellington?
Yeah, look, I think some halls are still open. So I think there's certainly going down to level 3. There's still a restriction on travel, so they still won't be able to come back from airlines, but obviously they have to drive. But what we found in the last recession was that if the unemployment goes up a lot of people go back to university or retrain. And we sure know we'll need some retraining if there's a lot of job losses. And, as I've mentioned before, we've got major announced infrastructure projects, and we don't have the skills numbers to actually deliver on those projects. So, I just think there's going to be more local numbers in the universities. I won't potentially make up for all the students coming in from overseas. Of course it won't. But I think there could be more demand on our tertiary education locally anyway. But I take Conway's point. That's probably the risk as far as what happens next year. From a student number perspective, and it's a long way away. Anything can happen, and you don't want to think too far in front. You just deal with what's in front of you at the moment. Yep,
very good. We've got Hans Jorgensen has got his hand up, and I can see in the questions a couple of questions in there about bank test rates. Are they going to be decreasing anytime soon, given the low interest rate environment? And is it a good time to go shopping for new property in the Wellington region? So Hans, in your first question, do we know if the bank test rates are going to be decreasing anytime soon? By that, do you mean the mortgage rate that the banks assume when assessing your ability to fund it?
I'm talking about the stress rates that they use.
Yeah, the stress rates.
Yeah. I know at the moment they've been sort of sitting around the 7% range, and I know they were starting to just creep down for a couple of the banks, and I know that the banks have different rates.
In my discussion with my bankers, they most recently were high sixes. I know Andrew Perry's here, and maybe Andrew, you could throw something in the comments box if you've got some up-to-date information. But certainly was in the high sixes as far as I know. Will they decrease further? I don't know. There might be a case for that if interest rates continue to fall, but maybe they'll be more conservative and they'll wanting to lend very responsibly. So maybe they won't decrease it. Any views from you guys on the panel?
Andrew can come off mute and have a chat if he wants to. Andrew, can you throw your money in? As he's finding his button. 6.65 is mid to high sixes at the moment, but it just depends as the longer it goes on, and how much bad debt each bank gets individually. Andrew and I, if they're looking to reduce it, I wouldn't have thought they would at the moment. But
my understanding is that they're still out there keen to lend, Andrew.
Yeah, no, absolutely. I would agree with Peter. I think it's unlikely that we're going to see a reduction in the assessment rates the banks are using. They've obviously still got their own internal credit risk. They're still going to be concerned about that. There is some talk that they are currently reviewing the LVRs as to whether those are going to be removed within the next week. If that does happen, I suspect it's more about supporting existing customers rather than looking to new customers. So, the government and the Reserve Bank are still keen to see the banks continuing to lend to customers. The banks are going to be more cautious, I think, with regards to their current credit criteria, just due to what the current state of the economy is. So I suspect it's unlikely that we'd see a reduction in those stress rates. I think it's going to pretty much remain very similar, and they'll take a closer look at affordability with regards to self-employed clients, bonuses, commissions, all that sort of stuff. Wellington, as you guys have mentioned, a lot of customers are quite insulated from that sort of thing due to the number of government employees we've got. So that's how I see it. And
Andrew, obviously the banks at the moment, the last few weeks, they've they've just been inundated with inquiries for, handling their existing clients and their existing clients' concerns or risks, and wanting to be empathetic with supporting their existing client base. Once that's kind of out of the way and they've handled that huge workload, as far as you can tell, are they going to be continuing to be, happy to lend, and or are they going to become all risk averse? What's the feeling you're getting from them so far?
At the moment, they're pretty keen to keep lending. There was definitely a lack of capacity in new lending. They stopped looking at pre-approvals a couple of weeks ago. There was a less capacity for them to look at new lending, and they will be conscious of what's happening in the market and how the government's responding. There's potential that credit criteria may tighten up at some stage, but at the moment they're trying to continue business as usual as much as possible.
Yeah. So, sorry, can I just, while I've got Andrew there, can I just ask him a question? So, Andrew, I was actually in quite an interesting position just before we went into lockdown, and I had just at the beginning of March managed to secure pre-approval. Yep. It was conditional, but I had gotten pre-approval from my bank for a certain amount based on a few conditions. Yep. I'm just wondering, from my perspective where I'm sitting, how good is that now, given what's unfolded over the last month and where we're probably heading over the next 2 to 3 months? It's a 3-month conditional thing. So
yeah.
So if you've
looking at it going, well, yeah, that was then, this is now.
So if you've got a pre-approval, is that approval going to be good, is what you're asking, Hans?
Yeah, basically.
Yeah.
Yeah, so there's been some communications come out. One came out this afternoon from ASB, one came out last Thursday from ANZ. So their main concern is around extending pre-approvals. And when it comes time for a pre-approval, that you've found a security, just making sure there's been no impact on your financial position. So no job loss, no decrease in income, this sort of thing.
Yeah.
They're happy to keep honouring those pre-approvals so long as the situation's the same. They may just ask for a little bit more information. So the communication came out from ASB this afternoon, for example. They're wanting stuff in writing from customers that there's been no impact, whereas that's not something they would have asked for previously. So that will be the main change that was seen in the last week or so. But they're still continuing to honour those pre-approvals. It's just at renewal time, they are asking a lot more questions.
So
yeah,
Hans, talk to your bank or your broker, Hans.
No, I have been.
Right.
It does depend bank by bank as well. Some will be more cautious, some will be less cautious, so some will be happier to lend than others.
Yeah, very good. So thanks for that, Andrew. Awesome. Hans, you also asked, is this a good time to go shopping for a new property in the Wellington region? Do you think it would be more prudent to wait? And Andrew, you also asked, do you expect to see a flood of listings once the government confers it's all go? Is there a month's worth ready to hit the market? So, I mean, I've got some views on that stuff. Firstly, Andrew's point, is there going to be a flood of listings come once it's all go? I don't think so. I don't think there's going to be a whole ton of stock just all of a sudden drop onto the market. As I said before, when things are uncertain, most people freeze, rabbit in the headlights, and they want to wait. And the absolute common line is, we're just going to see what happens. We're just going to wait and see what happens. And so when everyone does that, nothing happens. But anyway, so the ones who will be on the market or coming to the market will be the ones that have genuine motivation. They're not just mucking around. There'll be a lot of people who are nervous and therefore will sit on their hands, put decisions on hold, and will do nothing. But there are a bunch of listings that were on the market when we came into the lockdown, and most of those will still be wanting to sell. A bunch of them will have come off the market and will come back on again. And so I know, all my colleagues and myself included have listings ready to come on. And so there might be a bit of a jump in that week or that 2 weeks. But If you look at the month's listings, for example, I don't expect it's going to be a swollen amount of new listings. And is it a good time to go shopping? Well, I don't know what you guys think, but my view is that any time's a good time to go shopping, as long as the numbers work and as long as you have a long-term time horizon.
Yeah, I was going to agree with you on that, Adam. Having been in the property market for 20 odd years, I've never not been in it. I've focused on purchasing properties based on their merits, not necessarily based on what's happening in the economic environment at the time. So yeah, just do your due diligence, and if something adds up, then buy it.
And if the prices fall by 5%, big deal.
You're here for a long term, look at it for the next few years.
Yeah, if you wait for the bottom and then you plan on buying 5 that month, nah.
Good luck.
Yeah, good luck. Yeah. Any other thoughts on that, Pete or Matthew?
I was just going to say I wouldn't recommend anyone sort of hold out too long waiting for a great big bargain to come along and there to be a sort of 10 or 20% drop. We've seen in previous recessions and economic crises, just concurred with you, Adam, that the prices generally don't drop. People just hold on to them. So there may be a few people on the fringe, that are, death, divorce, things like that, where there is some genuine motivation to sell, where you might be able to pick up the odd place for a good deal, but I don't think it's going to be widespread. And as you say, people are just gonna hold on. Basically, I'm actually in that exact situation as well with one of our old house that we were in, and we moved out of it, and then just in the process of renovating it, and the plan was to list it actually in the next sort of few weeks, basically. And if we get a reasonable price, then we'll sell it, and if not, then it just sits there for another year, and we'll just hold on. So anyone that's out there, if there's a good property and it stacks up and it's getting a good positive cash flow, and it's in a good location, then go for it. But don't sit on your hands doing nothing, because you'll look back in 1 or 2 years and the prices might be up another 10%. So might have missed the boat.
There's always the possibility of a better deal somewhere, but waiting for the best one, it's a fool's game. So as long as you've got one where the numbers work, just go for it. Doesn't matter when it is. Anything else from you guys, Pete or Conway? Or?
No, I think agree. Exactly right.
No. Okay, all good. Well, it's 10 to 9. Probably we should draw it to a close. We do have some more questions, which I had sort of prepared, but I think we've covered an awful lot of the stuff. We've bashed this around quite a bit. Guys, those of you who are out there who have other questions or other stuff that you'd like to see discussed, then please shoot it to us. Maybe we'll include it in a future meeting, or maybe we'll just give you a ring and have a chat with you about it in person. But I'm just trying to see if there's any small numbers of items of business. Just in terms of going forward, obviously at the moment we can't conduct our meetings physically, which is why we're all here on Zoom, which is a great bit of software. We perhaps may do the next month's meeting this way as well. If we are able to conduct large group viewings, we will do that, but nonetheless we will we'll bring that out in the newsletter, and you'll hear about it one way or the other. And gosh, I can't even remember now. Are we hearing from Kiwibank's economist next month, Dana? Is that who we've got speaking?
I think Matthew was talking to him. I think that is who we were.
I think it may well be the Kiwibank economist. So I mean that'll be very, very interesting. In that respect, we're also looking to make use of this technology also to run more ancillary specialist industry meetings, shorter meetings on specialist topics. For example, we might have a property manager doing a 1.5 hour meeting once a month, or an accountant or a valuer, or I could do a meeting once a month just to give a snapshot of the marketplace and take questions, and a lawyer and so on. So we're in the process. Next week the committee are meeting, and so we will draft up a proposed schedule for that. So look out for that. So if you have if you have ideas about who you'd like to hear from, or what sort of industry experts you'd like to hear from, then please let us know so we can put that in the mix. If you do have specific situations that you would like help on, as we have already been promoting, please feel free to reach out. I'm now going to share my screen so you can see the contact details of a bunch of us who've made ourselves available. Here we go. And by all means, reach out and reach out to myself or Peter, or Matthew Underwood's kindly made himself available. Matthew is, of course, an accountant. And Dean Jackson also has said, by all means, give him a ring. Dean's a very experienced investor also. So all four of us are happy to field your calls or your emails if you need some support or assistance with anything. Other than that, is there anything else I need to talk about? No, I believe that's all. So look, I really appreciate it, guys. Thank you so much, Conway, Matthew, and Pete, for making yourself available and sharing your expertise and your insights with everyone tonight. Really, really valuable stuff. And I'm sure everyone's got good value out of it. All you members out there, thanks so much for being with us again. Hopefully we can be back doing physical meetings soon. But otherwise, we'll continue to make use of this technology. And also, big thanks to, I know there's a few of you who have joined the association, and this is your first meeting. I really appreciate you being here with us tonight, and look forward to meeting you sometime. By all means, reach out if there's anything in particular you need, or to either Dana or myself or Peter or any of the other committee. But thanks all. Everyone stay safe. Let's hope we can come out of this strong, and that it will New Zealand will do well out of this in the long run, and hopefully we'll get a bunch of good Kiwis heading back home and filling up our houses again. All right, thank you so much all. Have a safe week. Good night. See you next time.
Thanks.